Welcome to World Business. Now, Yellow Capital is a financial technology company working in both Europe and the Middle East. They say that our global economy is run by, and I quote, pilots who refuse to let go of the wheel. Well, they argue that a new age is coming where technology is becoming more trustworthy than the humans being typically in charge. Let's take a look.
Today, our global economy is run by pilots who refuse to let go of the wheel. Bankers, clearinghouses, custodians, all these institutions, they insist on manual control, not because technology can't do better, but because humans insist on being in the middle. They tell us we must trust them. And because of that trust, we pay 3% fees. We wait 3 days for settlement. We suffer through banking hours. Trust is the enemy of speed. Trust is tax on your time. We've built a financial world that steals that time. But in the 1990s, the architects of the internet created error code 402. They dreamed of a web where money moved as fast as data, but they couldn't build the technology, a door that remained closed. Today, we're printing the key to that door. It is time to let the code take the wheel. Technology shouldn't demand more of your attention. It should give it back. So humans can do what only humans can do. Let the code handle the trust so you can enjoy life.
So, is this vision of the future actually closer than we think? Well, I'm delighted to say that Yellow Capital's CEO, Diego Martin, joins us now from Miami. Diego, great to have you with us. Thanks for joining us. Tell us about Yellow Group and Yellow Group Capital.
Pleasure. So, Yellow Group is a group of companies focused on trading infrastructure and building infrastructure for the future of the finance. Yellow Capital particularly is a market maker, which is active across the major global exchanges, and as part of the Yellow Group, which is building this infrastructure for the tokenized finance. And think of us as an FX desk, but for digital assets. So we would provide liquidity for all these digital assets, stable coins, tokenized assets to trade smoothly across all the different venues, similar to banks, for token issuers, for institutions, and increasingly we've seen for traditional banks that are trying to enter this market of digital assets.
Now, we saw in your video a few moments ago this idea of trust and how it's changing. Should we really be trusting tech over humans, particularly when it comes to billion-dollar decisions? What's your philosophy here?
Yeah, we believe that trust is a limiting factor for doing business, and actually having to trust the counterparty, having to trust the other person or the other entity doing business with becomes very limiting. And as you know, coming into finance world where doing due diligence and having to look at who you're dealing with becomes an increasingly not only important factor but also expensive factor to lean into. We've seen that blockchain technology and crypto and this technology around state channels that we're building is a perfect, resource to use in order to say, let's provide this trust layer to this technology that will be able to not have an opinion, to not be able to, have to decide when there is any kind of dispute, and be able to be the result, the result factor when there's any kind of dispute mechanism. And this becomes kind of the underlying technology that will never make a mistake and will always be fair, because he doesn't have any incentive to go one way or another. There's no corruption. There's no change of plans. It's just two agreed parties that decide to enter in an agreement and decide to put certain rules into this technology, and then it's just mathematics that decides, what was the result of this transaction, whether it's financial, whether it's value, whether it's information, and that becomes very interesting because it opens a new world to what trading and what transacting was before. Yeah.
So are we at a tipping point then where this is becoming a bit more mainstream, moving beyond the kind of crypto bro culture and starting to work more for everyone?
Yeah, I think as any new technology, it takes some time to settle and to actually provide more of a consumer experience to what the technology is. My parents don't know how banks work. They don't know how banks make money, but they still put most of the money on their bank. So it's interesting to see how, it first starts with the most technical aspects and maybe the most techie guys. And that's the kind of the early adopters. And then it starts transitioning to a world where you don't really need to understand much. You just need to know it's safe and it's easy to use. And blockchain technology in both crypto and tokenization has been opening this aspect into, hey, we're open to help and we're open to, support maybe not so technical people, but this is all the pros, this is all the advantages, and you don't really need to know how to code or how to use your AI or how to do everything and understand all the underlying technology, but it's here, it's safe, it's proven, and I feel like as time passes and as regulation starts to accept this kind of technologies, we will move into a place where exactly it's not fashion; it's just an advantage to be able to use these technologies for pretty much any other market. Because in reality, everything can be streamlined with blockchain technology. It's just a fair mechanism of how to take decisions, which really opens into any kind of business decision. So yeah, I really believe it will be consolidating. I think regulation is helping a lot in this aspect, and I think as time passes, it's just going to grow more and more. And the consumer behavior seems to be growingly adopting these kind of technologies. So yeah.
Now, a criticism of VCs in your space is that they only invest in teams and products that look exactly like the ones that got the investment the last time, which of course is the opposite of innovation. When you look for where to invest, how do you ensure you're not just kind of reinforcing the same old echo chamber?
I think, as a market increases in popularity and as more venture capitalists and more liquidity starts growing, obviously there's a bigger participation from both the supply side and the buy side. And us from talking from both the supply side of the infrastructure, but also the buyers and the investors. For us right now, it's very easy, I'd say, to select those partners and those players that are really building by not only diving deep into the technologies that are actually and we think that will get mainstream, powered by AI, powered by all these new blockchain technologies, but also how streamlined can their business process be. There is companies in crypto and in blockchain that are operated by 10, 20 people that are having insane amount of margins and moving billions of dollars one way to another. And you see, when we look at those companies that are being increasingly lean, increasingly efficient by using these technologies themselves, by providing infrastructure that they might be using themselves, we've seen it from the case of stable coins, where Tether, I don't know how many people, Tether companies, they're probably less than 200. We've seen it from exchanges like Hyperliquid. They claim to have around 15 15 people company, right? And they're moving billions of assets. And it's just a proof, and it's just a showcase of how technology can really create some very efficient ways of working. And by using all these different sizes and different kind of technologies, you can really improve your efficiency as a company.
Okay, so what about the next 12 months ahead then? What are your plans? What are your priorities?
Yeah, I think the agentic economy is what excites me particularly the most. I think the whole way of how we use products, how we use technology, and how we access it will change. Maybe it's common now to open your email or to open your bank account or to open, all these kind of different front ends and internet kind of websites. And maybe in 18 months, I believe AI agents and your personal AI agent, kind of like your personal chief of staff, will be opening all these applications. And I've already seen the change. Obviously, staying at one of the most innovative markets right now, and I'm particularly using AI agents for everything. I think it's insane the amount of work it can really do. I don't open my email anymore. He just tells me which emails are the important ones. He actually also helps me to reply them. Same thing goes for many of the softwares that we use. I don't actually go into the website anymore. I just use my AI agent to access it and tell me the most important information. So I think for Yellow, what's very important is preparing for this agentic economy, preparing for a new user that will be an agent and will no longer be a human, and that we do believe that there will be eventually more agents transacting and doing actions in what we call the internet than in the blockchain and in any kind of market than humans. And they will be transacting faster, and they will be more efficient, and they won't sleep. And we need to prepare all our product lines, all our technology, so that these agents are able to access it in an efficient way and be able to read it. And that means, it might not be that important to have that much of a pretty website or that much of a, user experience, but rather an agent experience, and how he would choose to go for one venue or another instead of a human.
Okay, now staying with technology, and some of the biggest brands on the planet have reported financial results this week. Earlier, we got the lowdown from New York-based analyst Stephen Dickens, the CEO and principal analyst at Hyperframe Research.
We've had a fantastic week this week with signal from some of the big vendors around the underpinnings of the AI trade. I've been out this week. I'm coming from a hotel in Cisco, got a chance to spend time with the leadership there around what they're doing to support AI and really the deployment of customers' workloads in the enterprise. We've heard obviously a lot about the hyperscalers, but the enterprises are really driving some of this new wave. We've seen HPE report earnings this week, Dell last week, both of those with blowout quarters, particularly the HPE one's the most recent signal, 40% year over year. This is a business from the 1960s. So for a business that's that established, to be posting those numbers is huge. And I think it really supports the overall AI trade that we're seeing to reflect itself in the markets. I think what we should be taking away from this and some of the key themes is we've had the early stages of the AI build out. That's largely been about training, and it's been around these workloads being deployed really into 4 or 5 big hyperscale and frontier labs. This is the Metas, this is the OpenAIs, this is the Anthropics of the world, obviously Google in that mix as well. So, with also I'd throw in their XAI and what they're doing with Grok. So we've seen those come through and drive the training investment, and we've seen over 700 billions worth of investment being driven into those players. But we're into a new phase now. We're into a phase where we're seeing deployment at scale in enterprises, and that deployment is going to be different. It's going to be sovereign for regions like your own. It's going to be more driven around governance and security. So I think there's some key takeaways there. I think as I look ahead, what do I see? I see that we're still really early to the AI landscape. We've been talking about this now for about 3 years, but it's sort of, I would say, hard to think about this as a multi-year journey, but that's really where we are. This is still the first innings of a 7-game World Series. This is game 1 of the NBA Finals. We are still so early. We've got and I touched on it earlier, that inference, that's going to come through and start to see this deploy over into the enterprise, into data centers that aren't really sort of as much part of those cloud hyperscale data centers, but really sort of on-premise. And that's where the likes of the Dells, the HPs, the Lenovos, the Ciscos are going to see unlock. But what you shouldn't take away from this is there's not going to be also workloads in the cloud as well. So names like AWS, Google, obviously Microsoft, but also those neo cloud providers, the CoreWeaves, and a long list of others. We've got Volta in there, we've got Cumulus AI, we've got Nebius, we've got Lambda. There's a whole bunch of names, and being able to see those grow and scale, we're seeing just a rising tide raise all boats. Particularly for your region of Guy, and where you cover with A News, I think one of the key takeaways from me is that whilst this is a US-centric AI-driven trend, we're going to see those deployments. We see Core 42, we see a number of other sort of sovereign deployments in your region. So I think for your listeners, whilst it's a US tech stack, you know, we're seeing obviously Huawei try and get traction with some of its offerings, but I think predominantly this is going to be a US-driven tech stack. That doesn't mean there's not an opportunity for people in the region to be thinking about how they can deploy AI and get value from it at scale. I think if you look at what's happening, particularly in the sort of Middle East and Africa region, what we're seeing is those local deployments and workloads are going to be more sovereign. You know, there's a huge data play here, and that's going to be crucial. Those data centers are going to need to be deployed locally, not only for data, but also for latency reasons. One of the other big things, Computex has been going on this week in Taipei. Huge, big semiconductor event. We've seen announcements from NVIDIA, Intel. We've had one of our team on the ground, Stephen Sopko, spending time with the vendors there. I think there's going to be a lot to unpack. NVIDIA getting into the desktop business is probably something we wouldn't have predicted 5 years ago, but it's a reality. Those desktop-based systems to be able to run AI next to your main system, sovereign in your house, is crucial. We saw this coming from Dell when they announced a line of servers at their event. We're seeing Mac Minis from Apple sell out. I recently got a briefing from the team at Perplexity about what they're seeing with Computer, their deployment. People are really starting to use these tools at home and want to keep their data. Our team here at Hyperframe's been playing with Amazon Quick. That's a desktop-based application, really providing this productivity unlock. As I say, we're still so early with some of those tools, and I think it's going to be another power of growth. As I look ahead, Guy, and look forward, I think, as I mentioned a few moments ago, we're still really early in this trade. I still think there's a lot of space for this to run. I expect to see the sector continue to post quarter-over-quarter growth. when you look at particularly things like hard disks and memory, I think we've still got 24 months of supply constraints there to worry about. So that's going to reflect in earnings. If you've got names like Dell and HPE and Lenovo and Cisco and IBM, what I'd argue are stalwarts of the industry and some of those more storied players with long histories reporting blowout numbers like they have done recently, that's just further indication that we are still so early. And I think the trend has got room to run.
Well, that is all for this week. Do join us again next time for more Well Business.